Hello and welcome to week number 26. You made it halfway through the year. It was quite an incredible year so far. We came out of the recession obviously last year. A lot of movement and volatility. Then we went into the US elections and things stalled and then things picked up again. And then we started this year with everything a little bit dislocated. Nobody really sure about the themes. And are halfway through and we are all still kicking. Big thanks for everybody who came along last week for my live trading session when I was with the guys from Pepperstone. The live session kicked off a little bit with a delay because the BOE announcement came and pound just crashed. So we managed to get a short in, it was not too bad. Again, big thanks for everybody who made it. But what are we looking now? We're looking ahead at what the market wants to do for the next 6 months. There was a couple of themes playing out last week and the week before that rattled the USD pairs. There was a lot of short covering going on. I'm expecting some of that to still continue. So that should feed into a lower GBPUSD, a lower EURUSD in the coming week, specifically ahead of the NFP, regardless of what the outcome is. I would like to make it clear that I don't believe there's a central bank divergence between the Fed or the ECB. They're both about to deliver $1.5 trillion of liquidity in the next 6 months, and that should keep risk markets supportive for at least the remainder of this year, and the reflation trade not fully unwound. More of a Goldilocks scenario still carrying on. So I really like some of the cyclicals, also like some of the commodity currencies for the remainder of this year, specifically against yen, which we'll get into just now. So we're looking at the 5-year inflation discount rate, so inflation protecting bonds, and overlaid with AUD JPY. So inflation protected bonds sort of showed us that the inflation expectation has sort of came off the top. Mid-March, it kind of topped. They had one last bump up in May and never regained its strength again. That kind of felt like the AUD JPY and other pair yen cross pairs won't be able to find a leg higher either unless that starts coming up. Now there's a problem with all of this because oil continues to climb higher, and usually when you see oil climbing higher, inflation expectation usually tends to go with it. Now here comes the question, is oil about to come down or is it on its own path? I'm going to overlay oil for you as well, the CFT one. As you can see, usually oil moves really closely with inflation expectations, and over the past, I would like to say 3 or 4 weeks, it's done its own thing, which again causes the question, is oil about to top out or inflation expectation about to move up again? From my experience, usually bond is always right. That means inflation expectations are correct and oil is on its last legs higher. We had PMI reads still coming, actually not bad the last couple of months. So it's a wait and see, but it's getting a little bit dizzying, specifically for oil and inflation narrative. But overall, loads of liquidity hitting markets for the rest of the year. The indices should be trading really well, and commodity currencies to some extent as well. Having a quick look at the next week, the calendar has got nothing interesting for me until the back end of the week. Thursday we have the ISM manufacturing PMI for the United States, and then we've got the NFP. Now the NFP on its own is never really a game changer, but now the NFP is locked in with the Fed tightening liquidity, so starting the tapering discussion, giving us a roadmap. From my experience, we probably won't see that roadmap come together until actually December. A lot of people are thinking that the Fed will start signaling something in August or September. I don't think they will come together. I think it will go to the back end of the year, and that shouldn't help dollar really too much. But in the near term, again, the beginning of the week, nothing interesting, but in the near term, I believe EURUSD is a little bit hampered. I like to see the levels out in the next 30-40 pips lower, specifically in the beginning of the week. Into Tuesday, I like 119 getting taken out. I've calculated the last actually 6 NFP weeks and the ranges. On average, we get an ATR weekly range on an NFP week in EURUSD about 106, 165 pips. Majority were about 180, 85. There was outlier, there was about 220, and another week was outlier as well, which was about 90 pips. But majority of the times you can expect to see somewhere about 160, 170 pips move. That will mean if you don't have a gap open on the weekly, we should see the range in the EURUSD hold between one of these two levels. Again, my my thinking is there's too many dollar long shorts. They're trying to get out of the positions right now as there is little theme going on for them to hold it. They should see us probably early in the week see out those levels getting taken out. I have the same expectations for GBPUSD, so post BOE, it did come down a little bit, and I'm expecting this to continue. I wouldn't really think that we're going to see 136.46 that soon, but my bias is lower for now, as there's still about 17 shy of 18, sorry, $1.8 billion long GBP, and I think some of these will still have to come off from the CFTC report. That should mean more downside drivel for the GBP, and also for Euro GBP to some extent. I think it can start breaking out this range and start thinking about 187 in the coming weeks. If that changes, we will have to see through data or for some news narrative. But the mood right now is a little bit. There's no really theme going on. All those people that were piled into position, they are getting out. So open interest is actually reducing, and that will eventually kill the trading ranges and volatility towards July and August. But in the near term, I still like to see some stronger movements and a little bit more downside in GBP. I would also like to talk about gold, as that inflation expectation is dropping. Yields aren't doing much either, and the Fed is bringing forward interest rate hikes possibly by the end of 2023. Really, gold hasn't got a lot to climb on. If I see gold stay under 17.19 for the majority of the week, I will start targeting 17.30. That seems to be the most plausible move for me right now. Trading that might get a little bit trickier, so we might work around with data. Again, we have two data points that are important to me. One is the ISM. I might use that report to sell some GBPUSD if levels are still favorable, and then we also have the NFP, where I expect a good reading and market to start repricing a lot of things. Again, long term, we're not having divergence with the central banks, so ECB and Fed. They're both still full on doing QE. One of them said we're thinking about tapering, no plans whatsoever, and certainly no reduction. And if you do a bit of calculation, there's $1.5 trillion from both those central banks hitting markets, so really well supported for the indices as well. There's one last thing I wanted to talk about, which is something that catch my eye in the beginning of June, and I was flabbergasted. That is the USD CAD. So USD CAD was dropping, and then it came shy of 5.7 pips to take out the 120 level. So 120 was obviously a big round number. You never know if there's exotic options, but it very much looks like there was exotic options and somebody was defending that level. From my experience, usually when you see these big moves away from it, and that was quite massive, so we came a couple of pips shy of hitting that level, and then it went up nearly 500 pips. That to me really means that there was a real options defender driving the whole thing. Now, we also had the Fed helping that move a little bit. Again, in my experience, these levels, when it rejects so shy from coming to clear these big levels, market does tend to come back into it and take it out clean. There's just one instance now I've seen where that didn't happen. There was with EURUSD many moons ago. Let me double check when that was. I think it was 2014, I like to think. I've traded alive there, and I couldn't believe it when it happened, because I always thought it was going to come back, but it never did. Here again, so it was it was in May 2014. EURUSD came shy of, again, 6 pips, 6.1 pips, I believe, to take out the 140 level. It never did. It just crashed down, and since then been on a trajectory lower and then stabilized and all of that. But I don't think the same is true for USD CAD. I think we won't see what we see in EURUSD and USD CAD. I think USD CAD eventually, not next week, but in the coming weeks, maybe start of July, we'll start finding a leg to start attacking the 120 level again. So I don't think that was the definitive bottom, certainly because the Canadian economy is doing good. Lots of liquidity hitting the markets. The Bank of Canada is tapering. There's a lot going on for Canada that's actually not too bad, and I don't see why that move should have happened that aggressively. So I would like to see that getting taken out and possibly help other dollar pairs throughout summer as well. So again, start of the week, looking to see if we can catch some more downside in one of these pairs. And I'd really like to see EURUSD take out the 119 level. Now, it's not a lot of pips, maybe 20-30 pips, but when ranges are a bit tighter, that is all you're going to get. In Thursday, if if prices are still favorable, I do like to sell GBPUSD for a day trade, and NFP as well might give us an opening into legging lower into gold. That's all I wanted to cover today. Again, thank you for tuning in. 6 months of the year so far, and there's another 6 months to go. The majority of the more predictable swing trades will come towards the far end of the year. So I would like to, for you and myself as well, remind ourselves that there's always good moves coming. There's some weeks where the themes are a bit muddy, like the next week, and possibly some other coming weeks as well throughout the summer. But keep some powder dry towards the far end of the year, where there's going to be some bigger moves, a bit more predictable moves that you're possibly able to leg into it, specifically once we see the central banks bring a little bit more clarity to the table, where right now they're very divided. The Fed is divided, ECB are doing one thing, saying another as well a little bit. So keep a bit powder dry, and the bigger moves will resolve eventually. Again, thank you very much. That's all I wanted to say. Good luck everyone next week.